The Supreme Court has struck down the CDC's eviction ban. Median home prices are still up by 20%. Your rent is increasing even more. And forbearance data shows a very different outcome than many expected. So what does this all mean for the current state of the housing market and the state of the housing market going into 2022? In this video, I'm going to give an update on the housing market and the latest data. And if this video is helpful to you, make sure to like the video down below so this gets out to more people. So let's get into the first update. And that is the Supreme Court ending the CDC's eviction ban. The Supreme Court has blocked the Biden administration's order that extended the federal evictions moratorium ban. And the eviction ban took effect in most of the country. And this action from the Supreme Court was expected by the White House, but they had hoped they would rule differently. Even though the White House knew that it was likely the Supreme Court would shoot this eviction ban down, they took this action to extend the relief to renters as long as possible in hope that some of the rental relief would get out to more people. The CDC originally issued this ban about a month ago and it was set to expire on October 3rd. But with the overturning from the Supreme Court, evictions are allowed to begin immediately. There is still about 7 million people behind on their rent that could face eviction now that the ban has been shot down. So now they either have to get caught up on their own or hope that they get some more of the government assistance aid that is meant for rental relief. The eviction bans over the last 11 months have kept about 1.5 million people in their homes that would have got evicted otherwise. And this is great for families that was affected by the pandemic, losing their job or anything like that. The problem the eviction ban did cause is that a lot of small landlords haven't received rent in months or even longer. These are people that rely on the rental income to pay their mortgage or other bills from their property. So going several months without receiving rent and not knowing when their first rent will be coming in is very difficult on those that rely on this. And I'm not talking about big real estate companies that have thousands of properties that can afford to go without rent for a few months or that got relief from the government. I'm just talking about the regular person may have 1 or 2 rental properties in their portfolio that can't afford to go long without their rental income. See, there have been some protections for landlords and other homeowners, but not everyone necessarily qualified for this aid. And furthermore, people that have their properties paid off and rely on this income to live, maybe people that are retired, were unable to get mortgage forbearance, for one example. So I think the biggest takeaway from this is that the COVID relief money that was passed several months ago by Congress, about $50 billion, that was aimed at helping renters that have been behind on rent get caught back up, this money in large part hasn't reached the people that it needs to. Most of the $50 billion that was passed has not been distributed. In fact, as of last month, only about $3 billion of this had been distributed to renters. So there's still about $47 billion of money that's still unaccounted for or hasn't reached renters. So with the Supreme Court shooting down the ban, now the states really need to ramp up their efforts on getting this money out to renters. Otherwise, there could be a huge problem with many renters getting evicted, and that would not be good for the economy. But with that, let's move on to some more additional housing market updates from the last 2 weeks. Home prices were up nearly 20% in July year over year. This is 6% below their peak 2 months ago, but it is a significant decrease over the last 2 months as the housing market has cooled down. Seasonally adjusted, home sales are down by 1.5% in July. This is also a significant decrease since May and June. And new listings have fallen flat year over year after significant peaks and valleys from the last year. We're also seeing days on the market creep up, reaching 15 days in July. This is up from 14 in June. And so those are a few quick updates. Now let's get into some bigger updates. Let's move on to lumber prices. They've been slowly inching back up. By the end of last week, they reached $518 per 1,000 linear foot. So it seems like lumber prices are stabilizing, so $500 is about where they're going to stick for at least some time. These relatively low lumber prices are great news for home builders and ultimately home buyers. According to Doug Yearley, the CEO of Toll Brothers, lumber is down about $40,000 per house. These benefits should start to hit the market in the 3rd and 4th quarter of 2022. So we've still got a long ways to go for the new construction home market to return to normal. And now builders are able to secure lumber at a much lower price compared to the peak when lumber was at $1,700 in May. But just because builders are seeing significant savings in lumber, it doesn't mean they're necessarily going to pass it on to the consumer. And given how competitive the housing market has been, many buyers and investors may be willing to pay these inflated prices for homes. However, a quick tip: if you are buying a new construction home in the next 6 to 12 months, make sure you negotiate the price. A lot of builders are out there testing the waters to see if they can still get the higher prices for their homes and make more profit, even though their expenses have come down a significant amount. And so many builders may be willing to come down on their price, especially if they need the cash to go on to the next build. And now moving on to interest rates. Over the last 2 weeks, interest rates have remained unchanged at 2.87% for a 30-year fixed-rate mortgage, according to Freddie Mac. The flat rate has led to stable demand for mortgage purchase and refinance applications. Last week, applications to purchase a home increased by 3% over the previous week, and this is 16% lower than the same week a year prior. Applications to refinance their home increased by 1% last week, and were up by 3% over the same week a year prior as well. And overall, refinances have slowed down significantly after many homebuyers have already refinanced in the last year or so as rates hit record prices month after month. We've also seen the average loan size begin to ease. This is an indicator that first-time homebuyers who are generally looking for lower-priced homes are seeing an uptick in inventory that are helping them buy their home. This is of course great news for buyers. And now let's move on to forbearance. The Mortgage Bankers Association's latest call volume survey showed that the number of loans in forbearance has decreased to 3.25% from 3.26%. This brings the total number of estimated homeowners still in forbearance to 1.6 million. And now we've got almost a year's worth of data about people that have exited forbearance and how they did so. See, many people thought there would be a foreclosure crisis and that many people going to forbearance would come out of forbearance losing their homes. But something that I've been saying all along, which is shown in this data, is that many homeowners that were at risk for losing their homes were able just to sell their homes and take a profit or at least break even. Out of all of the homeowners that have left forbearance since June 1st, 2020, only 1.4% resulted in a short sale or some other form of repayment. And there were 7.4% of homeowners that were on forbearance that had to sell their house because they could either not afford their mortgage anymore or they just needed to repay the mortgage forbearance. But I think a lot of what's probably happened in this case is that those 7.4% were unable to make their payments, so they were able just to sell their home, and now they may have turned to the rental market or downsized to a smaller, cheaper home. But we don't have any data around that, so that's just my best guess. And the other 90% of people on forbearance were in good terms. Many of them didn't even miss a payment, some of them repaid the payments, or some others have come to other agreements with their bank. So it remains pretty clear that the forbearance program coming to an end isn't necessarily going to create a foreclosure crisis as many worried. So this could be bad news if you're hoping for the housing market to crash so that you can buy a cheap house, but otherwise this is great news for the housing market remaining stable. And lastly, let's talk about the rental market. If you're renting, your rent has probably increased in the last year, and if it hasn't, it's almost certain to the next time you renew your lease. Many renters got a real break in 2020 when apartments were difficult to fill during the pandemic. Landlords had to give a lot of concessions in many cases just to fill their apartments during the pandemic. But now coming into 2021 and going to 2022, many of these concessions have disappeared, evaporated, and are nowhere to be seen. This comes after the economy has opened back up and got back mostly to normal, and as the housing market has reached peak levels, increasing by 20 to 30% in many cases. And to add even more to this, many would-be home buyers have been beaten up by the housing market, so they have returned to renting for at least the short term. So this is all contributing to rent increasing dramatically. Rental prices have always been increasing before the pandemic. However, the pandemic has only made this worse. The national median rent increased by 11.4% so far in 2021. Compare this to just 3.3% for the first 6 months of 2017, 2018, and 2019. This is from data according to Apartment List. Additionally, the average rent growth has outpaced pre-pandemic levels in 98 out of the 100 largest cities in the country. And to make matters even worse, wages haven't kept up with the increase in housing costs. Housing costs are increasing 7 times faster than wages, so this will continue to compound the problem that we have of affordability of housing in the country. And some cities have seen this even worse than others. In fact, wages aren't even keeping up with inflation over the last year either. So you could see how this can really compound a problem of affordability that we already have. So overall, the rental market is beginning to resemble the housing market. This being that rental prices are outpacing pre-pandemic levels. And on top of that, there's no sign that the housing market, the rental market, or any market is going to crash or even retreat anytime soon. But I'll be keeping an eye on the housing market, so make sure to come back for future updates. And make sure to like the video down below. Thanks for watching. See you next time.